Inflationary worries are beginning to stalk central banks. The debate as to whether the rise in prices is becoming entrenched or is just a temporary phenomena continues. One of the latest to weigh in on that debate is the head of the Bundesbank, Jens Weidmann. He's telling the European Central Bank that officials should not disregard the risk that inflation could accelerate. Welcome to this week's IG Trading the Markets podcast. I'm Jeremy Naylor. I'm talking now to Martin Essex, foreign exchange analyst at Daily FX. Martin, welcome. It seems that the hawks from around the world are increasing in number. Should we be worried about inflation taking hold, do you think, as a general idea across Western markets?
I suppose it depends which side of the argument you're on, Jeremy. As you said, there were any number of ECB hawks on the news wires last week, suggesting that inflation was going to be a major problem. Yes, Jens Weidmann, the Bundesbank president, was one of them, but also, interestingly, the ECB vice president, Luis de Guindos, and Robert Holtzmann and Klaas Knot. So at least four of the members of the ECB General Council, that's the body that sets interest rates and monetary policy, were on the wires, it really quite hawkish, really talking about inflation. And yet, from what we can see, there are many members of the governing council who are not so hawkish, and led presumably by Christine Lagarde, the ECB president. So yes, a distinct split on the ECB, although we'll never know what the vote was because they don't tell us. But yeah, a big split. Sticking my neck out, though, the Doves will win.
Well, it wasn't long ago, of course, that the European Central Bank, along with other central banks, changed their view on inflation and took a more sanguine approach, I think it can be said, to previously held inflation targets. In the context of what we're hearing now from these hawks now coming out from the woodwork, do you think that was a mistake, or do you think that was a statement that came too early? Do you think that they should have waited on that, or do you think that we should, as a general rule now, have a more sanguine attitude to these inflation targets that central banks have held for so long?
Seems like months now, Jeremy, that we've been talking about this, doesn't it? Inflation is way above target. So in the Eurozone, for example, inflation is 3% and the target is close to 2%, so already way above. And what's going to be interesting this week is that we're going to get new projections on economic growth, but also on inflation. Now, again, sticking my neck out of this a bit, I think that they're only going to they'll revise up their core inflation target by, say, 20 or maybe 30 basis points over the whole of 2021-22. So in other words, now that we're here at 3%, I suspect that the ECB staff, the people who make these projections, I think they don't expect a major increase from here. But the question is, will it come down? And that's where you get the real division between those who say we can't cope with 3% inflation, it's much too high, it must be brought down, and those on the other side who say it's transitory, it's going to come down anyway, so we don't have to worry too much about it.
Let's be sure here. We're not talking here about the European Central Bank opening its toolbox and raising interest rates, are we? My understanding is that it's going to be an adjustment to the amount of money that they're currently pumping through into the markets. Can you clarify this, and can you say for sure that this is what the ECB is going to be doing this week?
What I can say for sure is that there's not going to be an interest rate increase or decrease or any change in interest rates. Right. This week or any time soon. I think the best guess is around 2024, so still a very long way away. What we might see, though, is some tinkering around the edges, principally because the economic outlook has improved. And so the staff projections on GDP growth will probably be revised higher. Now, yes, there could be some changes in the various programs that the ECB uses to push money into the markets, but I don't think they'll add up to very much, and I don't see the currency in particular paying very much attention to it. This is just tinkering. We're not going to see anything major for a long time yet, and certainly not till a long time after the Federal Reserve has moved.
I was going to say, is the ECB in any different position from, say, the Fed or the Bank of England, for example?
I think the simple answer to that is you can imagine a sort of a line, can't you, with the ones that are going to be moving first and the ones that are going to be moving in the middle and the ones that are going to be moving last. And I would put the Federal Reserve at the beginning amongst those that will move relatively quickly, and the ECB right at the other end among those that are going to move last to change monetary policy. And that means not much far ahead of, say, the Swiss National Bank or a Bank of Japan, right at that end of the scale.
One final question is, of course, as traders, we always like to know how to put money into the market to work. How do you trade the inflation outlook? When looking at the currency markets, of course, you've always got two sides to every story. We've seen a lot of ground loss recently by the US dollar. We've seen that economic data out last week confirming that unexpectedly low number in the jobs figure. And we saw, what was that, a 1 month low, I think, for the dollar. Clearly, this has pushed up the euro. Clearly, it's pushed up other countries' currencies, including sterling, of course. But how, as traders, do we go about playing this inflation opportunity?
I take a very simple view of this, which is that the currency market is the deep market, the liquid market, and therefore you don't need to really look anywhere further than that. I know there are other people who look at much more complicated assets to trade, but why not trade Eurodollar as it's there? And I think the euro has been pushed quite high because of all these hawkish comments that we heard last week. And I think that they moved expectations towards a slightly hawkish announcement this week. My own view is that we will not get that hawkish announcement. As I said right at the beginning, I think the doves are in control, led by the president, Christine Lagarde. And therefore, I think the risk is that those people who say, we're going to look through inflation, it's going to come down in due course anyway, those people will win the battle, if you can talk of it like that. And therefore, I think there's a risk that the euro will come down against the dollar after the meeting, after those new projections, after Christine Lagarde has talked at her press conference and explained things. So I don't see why you should look beyond the currency market.
And just to follow up on this, with that weakness expected in the euro-dollar trade, in other words, the euro losing ground against the dollar, assuming we do get the Fed moving first, do you see that giving further impetus for the dollar over other currencies, including the euro?
In a word, yes. I mean, I think that you could argue the other way. You could argue that, the markets know all this, it's all in the price, and so on and so on and so on. But I think looking forward, you have to expect the Federal Reserve to tighten monetary policy before the ECB, and therefore in the very long term, you would expect the dollar to rise and therefore the euro-dollar pair to fall.
Martin, it's a pleasure. Thanks indeed for joining us. It's great to be able to catch up with you again. It's Martin Essex. He's foreign exchange analyst at Daily FX. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.